There's no denying that China produces almost everything imaginable, from sewing needles to high-end vehicles, and ships them around the globe. But despite its manufacturing dominance, there's one crucial advantage that only the United States holds. On April 2nd, 2025, President Donald Trump stepped up to the podium at the White House, holding a striking red card. This wasn't just any card. It featured a list of countries, along with the new tariff rates the US was planning to enforce. As Trump began reading each name and rate aloud, uncertainty swept across international markets. Global stock exchanges, including those in the US, took a nosedive. The world realized that while this wasn't a military battle, it was a serious confrontation, one where financial strength would be the ultimate weapon. This marks the beginning of what many are calling a tariff war or trade war, a carefully calculated move by Trump that could potentially destabilize the world's biggest exporter, China. Now the big question is, if this trade war escalates, who comes out on top, the US or China? Welcome to another video from ZimVOICE. Before diving into the core of this economic clash, let's clear up what a tariff actually means. Many believe that tariffs are taxes placed on other nations. Technically, that's close, but more specifically, tariffs are import duties applied to goods entering the US market. To put it simply, if the US sets a 26% tariff on Indian imports, then products shipped from India will be charged a 26% duty upon arrival in America. According to Trump's new tariff card, Pakistan faces a 29% import tax, while China tops the list with a hefty 34% tariff. It's important to note that tariffs aren't anything new or unusual. In fact, countries like India already levy steep tariffs on American goods, 52% in India's case, 58% in Pakistan, and a substantial 67% in China. The main purpose behind these tariffs isn't to collect revenue, but to protect domestic industries from foreign competition. Take, for instance, Harley-Davidson, a premium US motorcycle brand. When it's imported into India, it gets hit with a massive 100% tax. If a Harley model costs Rs 5 lakh, that price doubles due to the tariff. Without such taxes, it would directly compete with India's own Royal Enfield motorcycles in terms of price. And naturally, if both bikes are priced the same, many would lean towards the American brand, potentially harming Indian manufacturers. So the government uses tariffs as a tool to safeguard local businesses and preserve foreign currency, since buying foreign products means money flows out of the country. Now that the US has slapped tariffs on imported goods, items from other nations entering American shelves will see a price hike. As a result, consumers are likely to shift towards US-made alternatives. For instance, textiles from India and Pakistan have long been popular in American stores, but with the new tariff structure, their prices will rise, making them less attractive compared to local options. Among all affected nations, China stands to lose the most. And according to many analysts, that was Trump's plan all along. Why? Because prior to the year 2000, America held the global export crown. But over the years, China overtook not just US markets, but the world economy in general. Today, everything from tiny gadgets to industrial equipment is produced in China and sent worldwide. Thanks to low labor costs, China undercuts global pricing with ease, and this has led to the collapse of many local industries elsewhere. Let's now focus on trade between the US and China. Back in the year 2000, America imported about $80 billion worth of goods from China and exported significantly less in return. Fast forward to 2025, and those numbers have changed drastically. The US is now importing around $440 billion worth of goods from China, while China is only purchasing about $100 to $45 billion from the US. That's a trade gap of nearly $295 billion, something Trump has repeatedly highlighted as a major imbalance. He believes that if America buys $440 billion from China, then China should reciprocate by buying a similar amount from the US. To shrink this growing trade deficit, Trump introduced higher tariffs aimed squarely at China. This move instantly raises the cost of Chinese products in American markets, especially electronics like smartphones. Even though Apple is a US brand, most of its devices from iPhones to Apple Watches are assembled in Chinese factories. And it's not just Apple. Tesla cars, laptops from Dell and HP, footwear from Nike and Skechers, gadgets from LG and GP, tools from Stanley and Black Decker. Even American toy brands like Mattel and Hasbro all manufacture in China. Now, if these companies start shifting their production lines back to the US, America could potentially reduce its dependency on Chinese imports by as much as $200 billion. That would shrink the trade deficit from $295 billion to somewhere around $80 to $90 billion. But there's a catch. Producing goods in the US is significantly more expensive due to higher labor and operational costs. So while moving factories home may sound good for the economy, it could result in more expensive products and lower profits for these companies. Still, Trump appears willing to take that hit all to disrupt China's dominance in global manufacturing. Meanwhile, China isn't staying silent. To retaliate, the Chinese government imposed new tariffs on American goods, making US exports more expensive in Chinese markets. This tit-for-tat battle has now escalated into a full-blown trade war, with both sides stubbornly refusing to back down. Prices of many items have doubled, for example. Something that cost $10 before now costs $20 after tariffs. And this applies to both American and Chinese goods depending on the country. So, who's likely to win in this economic standoff? That depends on who can last longer, because trade wars aren't won overnight. When you look at what each country imports, things get interesting. America mainly imports tech products, smartphones, laptops, toys, etc. If needed, it can source these from other countries like Vietnam, India, or Mexico without too much disruption. But China relies on a far more essential product from the US soybeans. Here's the reality. China's population is 1.41 billion, more than 4 times larger than America's. But it has very limited arable land, just 13% of its total land area, which works out to around 0.23 acres per person. And most of that land is used to grow rice and wheat, the staple foods. Now here's the twist. Pork is a major part of China's diet. In fact, China farms over 400 million pigs, more than the entire population of the United States. Feeding those pigs takes a lot of food, and the main ingredients are 60% corn, 40% soybeans. While China manages to produce most of its own corn, it simply can't grow enough soybeans. That's why it imports over 50 million tons of soybeans each year, a huge chunk of which comes from the US and Brazil. So, the problem is, soybean farming isn't very profitable. It yields only about 1,500 kilograms per acre, compared to 6,000 kilograms for corn. Darcy, so only countries with vast farmlands like America can grow it at scale. China has tried alternatives like canola, cheap but hard to digest, peanut and sunflower meal, not enough protein, even insect-based protein, still experimental. But none of these have proven reliable or scalable, at least not yet. On top of that, China runs on an export-heavy economy. It must ship products abroad to stay afloat. It can't afford to consume all that it manufactures. On the other hand, the US is a consumer-driven economy. If it doesn't buy from China, it has other options. That gives America a strategic edge. Back in Trump's earlier presidency, when he first introduced tariffs on China, we already saw China begin to stumble. Now, with this fresh round of economic pressure, we're seeing a similar pattern emerge. And just as we were finalizing this video, breaking news came in. Trump has decided to pause tariffs on all countries except China for a 90-day period, but increase tariffs on Chinese goods to a staggering 125%. That makes one thing crystal clear. China has always been his real target. So what do you think about this entire trade war scenario? Who do you think will win, China or the US? Share your thoughts in the comments below. If you enjoyed this ZimVOICE video, be sure to like, share, and subscribe. Those, we'll catch you in the next episode with another powerful story.